In 1999, investors believed the internet would change everything. They were right, but they still lost trillions. In less than 2 years, artificial intelligence added more market value than the entire economy of Germany. Trillions of dollars appeared almost overnight. Investors call it a revolution. Billionaires call it the future. But history has seen this movie before. And every time people believed, this time is different. A bubble was already forming. The terrifying part, almost nobody is asking what happens if AI doesn't grow as fast as Wall Street expects. The AI boom has created some of the biggest winners in financial history. Companies like NVIDIA, Microsoft, Alphabet, and Meta platforms have gained trillions in combined value. Every earnings call, every conference, every investor presentation, the same two letters dominate the conversation, AI. But this is where things get scary. Many AI companies aren't being valued based on today's profits. They're being valued on tomorrow's dreams. And dreams can become dangerous when trillions of dollars are attached to them. Think about it. During the dot-com bubble, investors believed the internet would change the world. They were right. The internet did change everything, yet thousands of internet stocks still collapsed. Because being right about the technology didn't mean investors were right about the price. And almost nobody noticed this. The same psychology is appearing again. Fear of missing out, fear of being left behind, fear that someone else will get rich first. It's the same emotion that drove investors into housing before 2008 and tech stocks before 2000. The technology changes, human psychology doesn't. Meanwhile, AI requires something most people never think about: an astonishing amount of money. Massive data centers, expensive chips, gigantic energy consumption. Companies are spending hundreds of billions of dollars chasing an AI future that may take years to fully monetize. What happened next shocked Wall Street. Some analysts started asking a simple question: what if AI revenues don't grow fast enough to justify these valuations? Suddenly, a different picture emerges. If expectations fall, stock prices can fall much faster, not because AI failed, because expectations became impossible to satisfy. But the real problem is much bigger. AI isn't just a technology story, it's becoming a concentration of power story. A small group of corporations controls the chips, the cloud infrastructure, the data, and increasingly, the intelligence layer of the digital economy. The winners could become more powerful than any technology companies in history. The losers? Investors who arrive too late, employees whose jobs become automated, and businesses that can't keep up. Billionaires understand something most people ignore. Markets move in cycles. Excitement becomes euphoria. Euphoria becomes speculation, and speculation eventually meets reality. Maybe AI becomes the greatest technological revolution ever created. Maybe it generates tens of trillions in economic value. But here's the uncomfortable truth. Even world-changing technologies can create world-class bubbles. And when a bubble reaches trillions of dollars, the consequences don't stay on Wall Street. They spread everywhere. So the question isn't whether AI will change the future. The question is, how much of that future is already priced in? And if the answer is too much, who will be left holding the bill?